What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I'm feeling like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Weiss here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. Today is no different. I have Hannah Smolinski of Clara CFO.com. And Hannah, before I formally introduce you, I always like to point out other episodes people should check out of the podcast. Since we met through EO, and you're in EO Seattle, right?
Correct.
EO Seattle.
Yeah.
I've had some amazing EO members on the podcast. Dee Clevitt, who we talked about the top productivity tools that both of us geek out on. I think we just talked about that for 40 minutes because I love productivity. The more productive I can be, the better. So we shared everything that we use from the productivity standpoint. Matt Zalk of EO Tulsa, he runs a real estate property management company, Key Renter Property Management, and he shared some amazing tips of how he's grown his business. Robert Hartline of EO Nashville talks about how he built up a software called Callproof and also how he built a chain of cell phone stores that he took it to over 100 million in sales. So just some amazing stuff that he talked about, and check out more episodes on the podcast. And this episode is brought to you by Rise 25. And at Rise 25, we help businesses give to and connect to their Dream 100 relationships and partnerships. And how do we do that? We actually help you run your podcast. We're an easy button for a company to launch and run a podcast. And we do the accountability, the full strategy, and the full execution and production of anything that needs to happen. You know, Hannah, we call ourselves the magic elves in the background that make sure we make everything happen to make it look easy for the host. And so if you thought about podcasting, you should. The number one thing in my life, Hannah, is relationships. I'm always looking at ways to give to my best relationships. And I found no better way over the past decade to profile the people and companies I most admire and share with the world what they're working on and what we can learn from them. So you can check out rise25.com. If you thought about podcasting, feel free to email us any questions that you have. And I'm excited to introduce Hannah Smolinski. She's a CPA and founder of Clara CFO Group, which is a virtual CFO agency providing small businesses with the financial clarity and profit and the profit maximizing strategies. Who doesn't want profit maximizing strategies? And her experience working for one of the world's largest accounting firms really inspired her to make corporate expertise accessible to small businesses and small business owners through their fractional CFO services. She's very modest. You know, I had to discover this on my own, but she hosts a YouTube channel with over 50,000 subscribers and uses that platform to help small businesses achieve financial success along with her services. So Hannah, thanks for joining me.
Awesome. Thank you so much for having me. I'm excited to chat today.
So let's just start off for a second, and we'll go back to what you learned in corporate of what you took into Clara CFO, but talk about Clara CFO and what you do.
Sure. Yeah. So Clara CFO Group kind of came about mostly from recognizing that small businesses usually don't have, as they're growing, they usually don't have somebody on the team that really has a financial expertise, and especially looking forward. A lot of times, companies will have bookkeepers or accountants or people who are helping them with kind of the more compliance-driven things and just, you know, the bare bones of finance, which is just like making sure you have accounting records. But then when it came to looking forward and making decisions and trying to, you know, improve profitability, a lot of small business owners just don't have that. And so kind of recognizing that need and understanding kind of the small business environment, that's sort of where the Clara CFO Group came out of.
What attracted you to this industry and CPA and then, you know, CFO work?
Yeah, I mean, I think I've always been math minded. So it fit me to kind of go the accounting route just personally. I really liked, I thought I would be a business major kind of, you know, growing up, and business was kind of always on my mind. I thought I'd own a little shop or something like that. But then when it really came into college, you kind of have to pick a specialty. I actually thought it would be marketing for a little bit, but then I had an accounting professor pull me aside and be like, no. If you understand this, you need to do this work and be an accountant. And I pushed back for quite a while until I had a good family friend basically say, if you can understand accounting, you understand the language of business. And if you can do that, you can do anything. So you don't have to be an accountant, but at least if it makes sense, go for it. So I took that advice, then decided to dive into it. And actually it's a great fit for me, but I didn't want to be a tax CPA. I didn't want to have tax season and do that whole thing. And then I kind of just found the route that really both served my brain really well, but also served the need that I could see in the marketplace. And that's where the CFO services came about. So,
What did you learn from one of the largest accounting firms that you bring to smaller businesses now?
I honestly think the biggest thing was being able to talk to people about difficult things, which you would not think would be the takeaway from a public accounting firm. But it was actually that relational aspect of being able to talk to people really that like we're actually in like a lot of times a very defensive place because I was an auditor. So audits are part of compliance. We have public companies, they have to go through audit processes, but we would be these young kids basically coming straight out of school, get our first real professional job, and then asking the controller of a large company questions about how they do stuff. And it actually is this sort of dynamic that is uncomfortable and obviously would be uncomfortable for them. But being able to talk through situations, being kind of almost emotionally intelligent about like what's happening, that actually has proved to be one of the best things that we learned. And now that's what I kind of look for in potential hires as I grow the business is that kind of ability to have difficult conversations about money.
How do you think about and how do you approach tough conversations? Because people are asking you, I know the companies you're working with, they may ask, can I afford to hire someone? They may be asking about what metrics should I be measuring? And you may dig into their financials and see things that you want to be brutally honest about, but you want to put it in a way that is, it's oftentimes someone's baby, right? They've spent a lot of time building this. So how do you approach tough conversations?
I think it's always kind of important to make sure that you're understanding that the truth needs to be revealed somehow, and that we do need to get to the bottom of it. But also, egos come into play. Personal passion projects, become really, really important to like a business owner. So a new client came on, and they've set up a lot of things that are actually putting themselves in a really difficult financial place. And also, you have individuals on the team that their jobs are really tied to these decisions. And, when you start to come in and sort of pull things apart and say, hey, maybe, this isn't great for the company and this isn't great for the company, it puts a lot of people in that defensive mode. So you have to be really sensitive about that. And I think it's really important to just kind of say, like, let's step back. Let's just look at this from like just a numbers perspective. What would be a way that we can move forward? And then never put any blame on any one decision or any one thing, but just thinking about how do we find solutions to get out of this situation. Focus on the solutions, not necessarily on who caused the problem or what caused the problem, but move it in that positive direction can help a lot. And then just listen a lot, I think, is the other part, is just make sure that you're really listening to what's actually happening, because that will keep you kind of attuned to, reading the room and how best to move forward, and maybe who can handle a harder truth and who needs a little bit more of a delicate hand.
It is tough because there's people at stake, and also people have put things in place and they may have been used to a certain way. So I'm curious, you come in, there's already been a bunch of things put in place, and sometimes you have to be like, that's not serving you. Like, we need to unravel this. What are some of the common mistakes you see when you come in and you start to audit and look at the business before moving forward and giving advice and advising?
One of the things we see first is going to be just a lack of transparency in the financials. We will oftentimes look at the financials and be like, wow, we really can't tell anything about what's actually happening in the business. Or, we'll have chart of accounts, for example, that are still in alphabetical order. And it's really hard to group your expense categories together when you're just looking at things in alphabetical order. If you can't answer how much do our people cost? If you don't have all your people costs all together in one place, it's really hard to do that. So that's kind of one of the first things we try to do is make sure that we can read the financials in a better way. So we have to kind of reorganize and go in there and do that. And then from there, we can start to dissect other numbers and kind of dig in from that to find out what else is happening.
So oftentimes you come in and it's just not organized properly.
That can be, that can be the clarity that can be had by having a proper chart of accounts and something that makes sense and that really anybody in the organization or any of the decision makers can read. That's step one of providing actionable, real improvements to the financial health of the business.
I'm going to, we're going to go through some common questions that you get that will serve anyone listening. And what I'm pulling up, if you're watching the video part, we can see here we're at claracfo.com. You can learn more there. But I wanted to pull this up, Hannah, this is your YouTube channel. So people can check it out. And I was sifting through it the past few days to see what are the most popular videos. And you can check it out. It's Clara CFO Group on YouTube. And, they have over 50,000 subscribers and all these videos. And it was interesting for me to see what are the most popular ones here, right? And so there's ones here that are small business passive income. You can see there's 80,000 of debt gone. There's how to read an income statement. I was a little bit surprised, actually. How to avoid duplicate transactions in QuickBooks Online is a really popular video. It's very specific. So apparently there's a lot of people out there that want that information. But there's a lot of great stuff here. What I wanted to start with, and this one, obviously, how to do a full month of bookkeeping, also got almost 150,000 views on it. So you can check those out. But my question is, what metrics matter when the company comes to you and said, what should I be measuring? What should my KPIs be? How do you approach that?
We are working on kind of like overall financial health metrics that we're going to be giving all clients. This is something new we're kind of working on where every single business we think should work on certain things. And then certain KPIs need to be tailored for the specific business and the specific business model. But overall, we like to make sure that we're, obviously tracking gross profit percentages. So we want to make sure that businesses are profitable and that we're not running, basically a break-even business year over year over year over year. I mean, even if you have outside investment and you're doing these other things, there should be some goal for small business owners in particular to make a profit. We need to be able to create that. We like to make sure that that we have good gross margins. So that's like if you're a product business, I can't really tell you exactly which percentage we're going to go after on that one, but you do want to track your gross profit margin. We've got like on the balance sheet, we like to make sure that we have a positive current ratio, which is making sure that your current assets, like your cash and your accounts receivable, can cover all of your current liabilities, like all your bills, your credit card bills and everything. We don't want to be racking up a bunch of like high interest debt, which credit cards obviously are. And then we also look at like debt to equity ratio, which is, how much are we leveraging debt versus how much are we leveraging equity? And like we see this all over the place. So some small business owners are so happy taking on tons and tons of debt. And then some are so scared of taking on any debt. And there's actually like a healthy balance in between that, because it's like if you don't take on any debt, you're not taking on any risk. And how much growth are you potentially holding yourself back from? But then if you're taking on tons of debt, you could be having high interest expenses and you're starting to like, how do you dig yourself out of it unless you're extremely profitable? So there's like these things that we're looking at. But one of the things that we like the most to look at, and we work with a lot of service-based businesses, is something called the labor efficiency ratio. So that came out of there's a author, Greg Crabtree, who wrote the Simple Numbers. What is it called? Simple Numbers, Straight Talk, Big Profits. It's behind me here. But he's actually been on the channel. I have an interview with him. He has this concept of labor efficiency, and that's where you can track for every dollar of labor you spend, how much gross margin or how much gross profit is that bringing back into the business. And to be healthy and to, have a positive, usually more than positive gross profit percentage or profit percentage, that usually needs to be at least 2. So a ratio of 2 or more. So for every dollar you bring in, you should be making $2 of gross profit. So that has worked really well when we talk to a lot of small business owners, because they're not thinking like that a lot of times. And that really helps when we go to answer questions like, can you afford to bring somebody on? Or who's the next hire that you need to bring on the team? Are they going to help you increase revenue? Are they going to help you increase? So that we really like that one, and it helps with overall just spending efficiency and analyzing, how we're using our money.
And I'm sure you get that question a lot, which is, can I afford to hire? When should I hire? And then it sounds like you really explore that labor efficiency ratio to see, is there any other considerations when you're answering that question for a business?
Yeah. Like when to hire. Is that what you mean? Yeah, I mean, it a lot of times what we're looking at is usually it's the business owner who wants to take something off of their plate. That's like usually the first steps, is just how do I get myself out of working in the business and starting working on the business. So we start to think about like, well, what skill sets are really the things that we need to bring in right away. I had a conversation yesterday with a client who really realized that the creative work of her business was still 100% on her. And that was the stuff that was really weighing her down the most. And she wasn't able to stay in her visionary role as the CEO, because still so many creative questions were flowing to her. And so what we've kind of landed on is that the next best hire is actually a creative director for her, to pull, more away from her as being that person. And obviously it'd have to be somebody she works really well with, and they have the same creative, vision, but she wants to work on bigger projects, growing the business in different directions. And so and then it comes to the question of, okay, well, how do we afford it? And what do we do? So, I mean, we try to identify the best next hires first based on the gaps of the skill sets and really what's going to free up the business owner or the other team members to be more productive.
Yeah, I mean, it sounds like, you're not just supporting that with numbers, but you're giving a lot of strategic advice around the business as well, right? Because in that scenario, it's not just a dollars and cents answer. You're really helping with the strategy of what do you hire next and when.
Yeah, and I think that's a little bit, there's a wide range of what like CFO services can cover. There's a lot of people providing CFO services that will just kind of help you analyze your P&L, and they'll kind of answer some questions, and they're really more still historical looking, and they can answer the what, like what happened to make software expenses twice as much as the budget, or what happened here with labor that it's up 10%. But what we're trying to do is be that strategic advisor, the trusted business advisor that understands all of the financials and can help make that good next decision on the financial side. And so we have to get into operations. We have to talk about what else is happening. We have to talk about marketing, pipeline, software, like really everything is kind of on the table to talk about in our CFO meetings.
Is everything's tied to something in the financials at some point?
Yeah. I mean, it all ties back. There's going to be anything that you're doing is going to have some sort of tie into the P&L or the balance sheet.
What scenarios, Hannah, do people come to you? There's certain flexion points, or what are the times where they're like, okay, we need to contact Hannah and Clara CFO?
It's there's two camps. There's everything feels like it's burning. We need financial help. And we still take on those clients, and we will do the best that we can to help them turn around the situation. We always say that this is not like a light switch. You can't flip a financial situation around really quickly. It's kind of that slow turn of it takes a while, but if you start making good decisions, you can get there. And so there's everything's burning, we need help. And then there's the people who are growing their companies, and they are in that situation where they have been making decisions usually based on their gut and looking at their bank account for a really long time. But they're starting to scale to the point where they're like, at some point, this is not going to serve me well because I can't juggle all of that information just in my head anymore. And, bringing on salaried employees at, 6 figures over and over again, it starts to get concerning as the pipeline coming in as it needs to cover all these people. So it's usually the people who are scaling their businesses, and they start to just realize that like that forward-looking piece of the financials is missing, and their bookkeepers aren't helping them, and their CPA doesn't answer their calls, and their CPA doesn't even know what's happening in the future because they're usually focused on what's happening in the past. And they're like, okay, I need somebody to do that. And that's the CFO looks forward most of the time. We look back, to see what happened, but a lot of our discussions are around looking forward and what's next.
It's forecasting, it's projections, it's growth, it's what do we do in the future? Is there a certain size that you see that's common trend of when someone hits this size and beyond, it's really, that's when they start contacting you? I don't know if it's a revenue size or a staff number size.
Yeah, I mean, complexity or sophistication is another way that we like to call it. It definitely is a factor. So sometimes, I mean, you can have a $15 million business that's actually quite simple. And then you can have a $500,000 business that is extremely complex. So what we look at is kind of a mix of, how many employees do they have? What's the revenue? We wouldn't usually recommend CFO services to start until somebody's around 500,000 in annual revenue. And that's just mostly because they might need the help a little bit earlier, but our fees are a certain amount, and we wouldn't even recommend them spending a certain percentage of their total P&L on CFO services until they reach to a certain level. We have like clarity calls we can do with people one-off here and there, but for that ongoing service, kind of say like 500 is kind of the minimum of when we do that.
Let's talk about cash flow for a second. What are common questions that you get around cash flow from business owners?
You mean besides how to increase it? How do I get more of that? That's the number one question. Yeah, it's like a lot of it is, it becomes that thing where, people are making decisions and then they're not necessarily thinking about like the timing of when things happen. And so you might, make a decision to make a big inventory purchase, for example, but then the next day payroll comes out, and then the next day your rent is due. And then all of a sudden you're in a situation where all your money is gone and you don't know, what to do. And you certainly don't want to get into that situation again. So a lot of people will just be at that place where they're like, I need to improve it. They might not even use the word cash flow. They're just like, I'm always like on a hawk. I'm looking at the bank account. Like I wake up, I roll over every morning and I check the bank account on my phone, because they just don't have enough clarity to know exactly what to expect. So then they're just, kind of obsessively thinking about their bank account. So it usually is just like, how do I relieve some of that anxiety and stress about cash, and is there going to be enough?
Yeah, I like how you said that there's a timing issue, and people should be aware, even if they have the expenses, to pay attention to when the timing is or when things are coming out, because that can make a big difference. Even credit card stuff too.
Yeah. You've got payroll coming out, it's 50,000, and then an American Express charge that comes through, and it's another 50. And if they align, just wrong, and you had 100,000 in your bank, you're out just pretty quickly. So
I love to hear your thoughts on how much, and it may vary. You may have different opinions on it. I'm sure it depends, but rules around how much cash flow that you recommend a business have in the bank, like that actually they have in the bank. And I'm sure it depends if someone's conservative, if they're not conservative, but is there some kind of, general range that you'd say, hey, I'd like for you to have X amount of cash flow in the bank, like for services or whatever whatever it is over the next few months, all the expenses. I want you to work to get this in the bank.
yeah, we internally we use 3 to 6 months of operating expenses in your bank account. Now that might be split between, a savings account and a checking account. And this, we've also noticed that sometimes we'll modify this down depending on the business model. So we might be in a situation like if you're in a B2C service-based business, for example, and maybe if you don't get paid, employees don't get paid, you might be able to get by with a little bit less. Because basically, if all of your work dried up, you also wouldn't have the expense of payroll, which is probably your biggest expense. So in those situations, you could kind of pull it back or, save a little bit less or be able to take out a little bit more of the earnings or, whatever it is that they're going to do with their money. But then there's some other businesses that, maybe have, higher expense burdens. Maybe you have a really talented, expensive workforce that you don't want to lose people because they're so hard to bring on. We work with an engineering company, and when these engineers are so specialized, a lot of them have gone through, even immigration stuff. We've sponsored green cards, we've done H-1B processes and stuff, and we've invested a lot into getting these engineers on and 2 to 3 years of training to get to where they are. You don't want to lose those people, and you don't want to have to let them go if you're low on cash flow for a couple months. So, you have to think about your workforce. You need to think about what your revenue model is. What if everything turned off? How much money would you really need? And kind of go through that exercise of thinking if no more money came in, what could I do? And what are our contingency plans? And then that will help determine really how much cash you need.
Love it. Thanks for walking through that. I want to talk about a few scenarios. Okay. And I know you work with a lot of, people in various industries, whether it's manufacturing, engineering, e-commerce, food and beverage. Let's talk about e-commerce for a second. There was one person that had e-commerce business that started out in their house. What happened with that?
Yeah. So this was one of my first CFO clients, and she's still with us today. I think we're coming up on almost 5 years. But she is one of my favorites because she started her business, but totally out of a passion, which I think is a lot of small business owners. They have a passion for something and they, realize there's a little bit of opportunity there. So I'm sure she never would have imagined where it is now, but started it out of a passion, had held inventory in her garage. She was working out of her house for a really long time. Or not even that long. I think it was 2 or 3 years, maybe. She met me. We started working on the business. There was a lot of things that needed to be worked on, like profit margins. She had no idea how to track if her products were profitable when she was selling them. She started a small e-commerce store, and she didn't have the data come in to see if her things were priced appropriately. We realized pretty quickly once we got that data that they weren't priced appropriately. So we changed that, gave her new models to every time a new product came in, she knew what she needed to price it at in order for it to be profitable. And if she couldn't, she didn't buy it. So we kind of started that process, and then started to hire an employee, started to hire another employee, moved to her first office space, maxed that out within less than a year, had to move to another office space, maxed that out, I think after 18 months. And I think she's in either her third or fourth office space or warehouse space now. with all the inventory that she has. And her team, I think, is like 15 to 18 people now, employing people from, packers, pickers and packers that we call them, or marketing. She has full-time marketing help. She has full-time operations. And she's also just, thinking about how to expand product lines even outside of just the physical products that she was selling. So she's got a great social media presence. She's on YouTube, just really doing all of it. And it's really just so awesome to be partnering with her.
That's cool. You get to see the evolution.
Yeah.
From
And
the
she's
start.
a, multi 7-figure business now. It's, when we came on, I think she had like 250,000 maybe of annual revenue, which I thought was very impressive at the time. And then she's more than 10x'd it at this point.
There was also, a consulting company that you worked with.
Yeah. We love working with consulting companies too. And I think like with consultants, you get those people who are really good at that thing that they're really good because they're consulting for other people, right? So they're very intelligent, very driven people typically, and they're looking at, how do I do this at a different scale? And so we had a partnership come in, and these two female founders were very passionate about the type of consulting that they were doing, and but they were also like burnt out because they were the ones doing and fulfilling all the projects. So their big thing was, okay, how do we actually get some additional help? How do we offload some of these things? And so we just started hiring, and they were really scared to bring on salaried employees. But when we did the financial modeling of everything and we proved it out, I think a lot of times people think that if you hire somebody for $55,000 a year, you need to have $55,000 in the bank. But like that's spread actually across the whole year. So you can, you need to have a little bit of cash, but, with good financial projections, we have been able to grow their team. I think they're at like 7 or 8 professionals now. And they're also taking on multi-million-dollar projects. So they were kind of scrimping by with, 15,000 here, 20,000 there. And now they're at this place where they can really fulfill these larger, longer term contracts. And they're over 7 figures in annual revenue every year now. So it's pretty exciting.
It sounds like things became less scary when you just model it out financially.
Mm-hmm. Yeah, sometimes it's just proving to people in the numbers that they can do it. And, also helping, with them, it was really important to show them how important tracking their pipeline was and the activities way before the revenue hit. The activities that they were doing were so integral to their success. So we were able to kind of help them focus on the business development side and make sure they had room to do business development in order to grow the business, because they never would have been able to if they were just fulfilling all the time.
I want to have a conversation around finding and keeping talent. I mean, in this situation, a lot of times you could be road mapping out when someone should hire, how should they hire. So I'd love to hear your thoughts on that. And I know, obviously, you bring on clients, but you also hire amazing people who are fractional CFOs. Who's a fit to work with you? What type
You mean
of...
from an employee side?
Yeah.
Yeah. What we look for now is first, we do our first scan based on skill set, like of just like what their experience is. I really love somebody who has public accounting experience because of that, what I mentioned earlier about being able to have those difficult conversations about money. It's not a requirement, but I like to see it. And then we look to make sure that they've had some kind of like financial leadership, specifically in financial planning and analysis. So if they haven't been a CFO before, if they've been in some type of FP&A group, if they've done that like in a larger corporate company or things like that, really I'm looking for the skill set of like, have they had to look forward? Because that's not all accountants have done that. And so that's like a really important thing for us. And then we really scrutinize on values. We make sure that like our interview questions are value driven. Most of our interviews are value driven, actually. We let the resume kind of speak to itself. And then most of our interviews are really spent talking about like, why they want to help small businesses and what is it about it that drives that. How do they show like integrity in their everyday life, and just how do they continue educating themselves, because continual education is one of our core values. So we ask questions based on that and find alignment, and then we do like a skills, like practical step in our interview process, where we actually give them a set of financials and basically say, talk to me like I'm the client and explain what's going on and what you would improve. And so we have like a multi-step process of trying to find the right people and making sure that we've got the skills covered, but also that it's just a good fit overall.
A lot of service-based companies are people-centered, people-based businesses. What have you found? What's been your experience with how you've found to best support and keep great talent?
I think one of the things is to make people, because we're hiring people who are further along in their careers. And I think it's really important to make sure that they feel valued for like where they are in their career, both with compensation and with just respect, making sure that their opinions are respected, making sure that we give them opportunities to do things besides just client service. Maybe it's like a passion project, or maybe it's, working on something that they like heard about and they're like, hey, I think we could implement this into our CFO processes. Like we have one employee who was listening to a continuing education, and she was like, I think this would be really great for helping develop our framework overall for how we, do this service. And we've taken that and we're starting to implement it across our team. So like she feels like she's involved and that her opinion matters. And I think at this level, when you're hiring talent that has had, this longer term career, that they need to feel a part of the team in a different way. So I think that's been really helpful. And then, yeah, I mean, you need to pay people for, what their market value is. And, that means that there's some big steps that have to be taken in the finances and you have to be ready for that. So that was a big thing when I went from just me doing all the services to starting to pay other people. It was a really big step and really scary, but it's something that I'm so glad that I did.
Hannah, I have one last question. Before I ask it, I want to point people to claracfo.com, CLARACFO.com to learn more, check out more episodes of the podcast. My last question is around tech. I'd love to hear what you love to use, what you've seen some of your clients use. I know you mentioned Pipeline. I'm sure people have different CRMs that they use. Marketing, financials, what's some of the tech stack that you use or you've seen your clients use?
Sure. I mean, what I see most is the kind of the accounting stack. So we love QuickBooks Online. That's our favorite. We prefer that when clients come in using QuickBooks Online. If they're on desktop, we usually try to switch them over to QuickBooks Online. We use a financial planning and analysis tool called Jirav, JIRAV. And that's been kind of transforming our client service deliverable. And it also allows us like really great reporting. We've been able to standardize our deliverables to our clients. But then also we can do really great forecasting. So we can do something called driver-based forecasting, which we can just get a lot more accuracy, which has been so helpful for clients. And then it gets us out of Excel. A lot of clients don't want to look at Excel spreadsheets for some reason. I like looking at Excel spreadsheets, but not everybody does. So it gets us out of Excel, gets us into a different platform. And then it also allows us to visualize certain metrics that we think are important, like the labor efficiency, those ratios that I mentioned earlier. We can kind of put all of that there. Payroll providers are kind of across the board. I mean, I'd say like, a lot of them are on Gusto, ADP. Some are using QuickBooks payroll, but we're a little bit more agnostic on our payroll providers. We're just trying to find the right fit for the client when they need it. Some need like full PEO services, and some just need like as basic of a payroll platform as you can possibly get. So we try to we do a lot of software recommendations actually for clients. And then CRMs are kind of all across the board as well. really what we just want to see is that they're actually using it if they're paying for it. And that they're
We've been guilty of
being
that.
religious. Yeah. I think everybody has, right? I mean, you're like, I'm going to do a CRM and then don't update it or whatever. So, we ask those questions. We go through deep dives into their expenses and we're like, are you using this? Are you using this? And if they're not, we say either start using it or we cut it, save some money.
Are there any ones that stick out that people are actually using? CRMs that people like?
Actually, a couple of my clients are using Less Annoying CRM, which I think is a hilarious
Is that
name.
what it's called?
It's called Less Annoying CRM. And then some people are just tracking things, like some of our clients just track things on Google Sheets or Excel because there's not a large volume, but they can keep track of it like that. Yeah. I'm trying to think.
We've
of other
used
ones
Pipe
that
Drive before, and that was,
Pipe
I
Drive.
think, more robust than we needed. So we switched to Active Campaign. So we
Mhm.
use Active Campaign. I had actually the founder on the podcast. People can check that episode out if they're interested in learning more. But that one we use pretty religiously.
Yeah. I didn't know Active Campaign had a CRM function.
Yeah, they have like a deal thing where you could just obviously use it for email, but also CRM.
Yeah, that's great.
Any other things that you use for communication with your team internally? Because I imagine they're remote. They're not all coming into the same office.
Yeah, we've got 2 employees here locally where I am, just north of Seattle, Washington. But then we've got other employees in other states. So we do Slack. So that's kind of the main communication point throughout the day. We have quick questions. We can just put them there. Try to keep most of our communication there. We moved to that a couple months ago, and it's been a good shift.
Awesome. Hannah, I want to be the first one to thank you. Everyone should check out claracfo.com to learn more and more episodes of the show. And thanks, Clara. Thanks, Hannah. Thanks, everyone. I almost really called you Clara.
Thank you. It happens
Thanks.
all the time. It happens all the time. Thank you so much.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sailing right now. I'm feeling like $100 grand.